Hey there, YouTube family. Well, it looks to me like the month of July is the month of the underdog stock or crypto. First, we saw XRP taking off, finally winning their lawsuit. Then Carvana went on an incredible joyride. And lo and behold, Friday after market close, AMC skyrocketed to the moon. What is going on? And does any of this give us a clue about where we're at on the micro bull run? Does this signal the end or the beginning of the market's momentum? Well, we've got a good show for you guys today. Let's get into what happened with AMC. In the news, AMC stock surged by 100% after a Delaware judge halted the settlement that would have enabled the company to convert its preferred units into common stock. The AMC army finally got a good day in the markets. Apparently, July is both the hottest month of the year for the weather and for the underdog stock or crypto. Started with XRP getting a judgment in its favor. The federal judge ruled that XRP was not a security. XRP jumped 100% in value overnight. Then Carvana literally rose from the dead over the course of 2023 when the stock went, as I said, on a joyride and hit almost $62, driving it up almost 900%. And now it's AMC's turn to get some much needed good news and some much needed bullish momentum. But what does all this mean for AMC? How high or how low can AMC climb on Monday? Is AMC a good investment now that the judge has halted the AMC board from their stock dilution scheme? Is it time to join the AMC army, the Carvana army, or the XRP army? Well, I've got some technicals, some predictions, and some answers. This is the Stocks with Josh show, guys. Thanks for hitting those likes. Say hi in the comment. Hit the subscribe to get the next video. Watch out for the scammers. They're always in the comment section using my picture and my name to try to get you guys to DM them on WhatsApp and Telegram. All right, let's just go back in time. In May, I made a AMC prediction in one of my videos. It wasn't the focus of the video. It was just a quick overview of AMC. And the reason why I made it is because somebody in the comment section said, Josh, check out AMC. I'm dying on this stock. Let me know what you see. Is this thing going any higher? Can I get any of my money back? So I went into the charts and I spent a good 20-30 minutes and I noticed that it was setting up for a move. Now, we've had this big move, right? And I'm going to get into that in just a minute and where things could go. But it's funny, I was looking at the chart again today to give you guys, prepare this video for you guys. And I realized that if I had looked even more closely at the technicals, that I would have actually been able to determine that it was going to happen in July at some point. I gave that prediction in May and that the stock was basically going to come up against a strong descending line of resistance and that we were going to get another squeeze out of it. And I predicted that the price would be $8.50. You guys saw that we hit $8.75 in after-hour trading on Friday. But after I made that prediction, I got a little bit frustrated with it because the stock went sleepy. And when I made that prediction, the stock was around $5.40, and it slowly began to drift off under $5 and then into the $4 range. And I thought, man, over time, it was in the back of my head. I was like, did I get that one wrong? You know, I didn't get it wrong. That move was inevitable. Shot up to $8.50, and it's a huge win for a lot of you guys. After hours Friday, AMC ended the day trading at $7.17. Now that was after it had spiked up to $8.75, which was a near 100% gain from where it started the day at $4.40. AMC, after falling all of 2022, fell another 72% in 2023. Now, I've covered AMC in the past, and I've made a number of important points that I've drawn out to give you guys some perspective on whether or not this was an investment grade stock. And these are the three areas of concern that I've identified in the past. Their debt is out of control. In my view, they've already gone past the point of no return on how they've managed their debt. Bankruptcy is inevitable unless they find some other success, which I do not see right now. And then you got the CEO squandering the meme stock rally by making a series of poor decisions and poor purchases and poor expenses to make it was just the icing on the cake of the debt problem. And then you had the myth of the mother of all short squeezes, which was a myth because Wall Street doesn't play by the rules. Wall Street makes the rules. And the reason for that is because of guys like Gary Gensler over at at the SEC or the politician ruling class. They basically lie to you and they cater to them. As a result of those three things, most analysts give AMC a D rating as far as AMC being an investment company. And in my view, you don't have to be a genius to know that if you came home with a D rating from school as a kid, mom and dad are not going to be proud of you. They're not going to take you out for ice cream and you're not going to get sprinkles. And I'm going to tell you that the AMC shareholders, unfortunately, they're not going to get sprinkles today. What you got was that predicted pop that I told you guys back in May. You're going to get to $8.50. You're going to get an opportunity to take some profits. You're going to get an opportunity to potentially get out of the play. That's what we got. But now I'm going to go into the charts and I'm going to point out a few things to you guys as to where AMC could potentially go to, because there's an indication that we could go higher, but the charts, as I say, will show us the way. All right, so when we look at the historic view of the chart, which is the AMC chart over time, we have a descending line of resistance. And this meeting up with the current price is how I knew that we would likely get a spike up to around $8.50. And if I had looked at it even more carefully, I probably could have predicted that it would occur in July and not in June. At the time, I was just running some quick technicals for somebody in the comment section. But you can see that we got to the point where this pop-up had to happen, and it hit right at that descending line of resistance. And so the question is, if we were to go higher and push above it, that would be actually a very strong and bullish sign for AMC, telling us that it could go much higher. Right now, it's operated as a very strong resistance. It hit that line and it immediately sold beneath it. And so here's what we want to do moving forward. Now that we've achieved that first technical level that's been respected, okay, now we want to see what type of candle gets formed at this level. And to do that, we're going to go look at some of the other times when the candlestick on the monthly chart hit this line. Well, we got some pretty ugly candles. We got these tall wick bearish monthly candlesticks. So we're going to know within a day, within a week, and by the end of this month, whether we're going to get another ugly tall wick bearish candlestick like we've got now. And that would signal that if we look at the way that it's performed in the past after touching this line of resistance and not breaking above it, it would signal that AMC is going to get a new 52-week low. Now, nothing's changed on the fundamentals. All that's happened is a federal judge blocked the CEO from making another bad decision and diluting shareholder value. So think about that for a minute. This was a pop-up for AMC because the current leadership didn't get their way. How far can a company go if that's the success story? I also want to point out that that descending line of resistance actually met up with the 20 SMA on the monthly candlestick view, and it also acted there as a second level of resistance. All right, but let's just go over full support and resistance. I see support beneath it at $6.50, but don't expect a bounce there. That would just be the next layer of support beneath it. It could just go right through, it could cut right through that price on its way to a lower price. But if it did bounce there, then we would look for it to reclaim $8.50 and $8.75. Now, if we were to break above the descending line and break above the 20 SMA, then it could go as high as $12.50. That's the next area of historic resistance. And so that's where you would see more people looking to take profits if it were to break out and break up. That'd be the next profit-taking zone for people that invested at $4. So another reason why I saw this move coming goes back to the issue of AMC being a highly shorted stock. If you understand the way shorts work, they profit when the stock drops, but they don't lock in their profits until they buy the shares. Because initially, to take the short position, they borrow the shares, and then when they close their position, they buy them. And a short squeeze is when the stock begins to move up and the people that are in it begin to lose money, they were shorting it with the borrowed shares, and they're concerned it's going to get away from them, and so they close their position and buy the shares. Now, the reason why the mother of all short squeezes did not occur, and I've talked about this on this page before, and it's a good lesson for all of us, is because, like I said, Wall Street makes the rules. They don't play by the rules. They got together, and the hedge funds and the clearinghouse exchanges protected themselves and prevented that from happening. One of the ways that we saw that was we saw that the Robinhood app, which is highly used by the unskilled investor who's unfamiliar with a lot of the technical tools that Wall Street uses, they're the ones that would have had the potential and the drive to push AMC up to the mother of all squeezes, but they got shut down. Robinhood tied their hands and froze trading on AMC so that it wouldn't happen. They did that to protect their profits. And let me explain to you guys why. Robinhood uses pay for order flow. That means that they batch sell the orders that they get from all of you guys to these clearinghouses that make profit 1 or 2 pennies off of big groups of orders. And so it's one of the reasons why I like the moomoo investment app, because they don't use pay for order flow. They're not tied into that game. They use margin to profit off of the customers. So what using margin looks like is if you put on a lot of money, you put in some cash and you begin to trade, it takes time to reconcile those trades. And so if you do a trade and then you follow it up with another trade, while the first trade is settling, it's on margin. This is how all of these companies work. And they offer the lowest margin out of any of the retail applications, including Robinhood, including WEBULL. It's one of the reasons why I like moomoo. I like the way that they roll. But here we are in earnings season. I want to mention again, I love their earnings calendar. I use it every single day to keep track of the next pop. If you don't have the moomoo app and you need better trade tools, click on the link in the top pinned comment and you can see that they're offering up to 16 free stock as well as a $50 bonus. Each and every one of those stocks could be valued up to $2,000. It's like a stock lottery. So go ahead and click on the link in the top pinned comment to check out the details for the moomoo app. All right, so the final question that I want to cover with you guys today is, does this pop up with XRP, Carvana, companies like NEO, and now AMC tell us anything about where the micro bull run is at, where the markets are at? I think that it does. The very last time that we saw AMC, the initial time that AMC squeezed, it squeezed up right before the top of the 2021 bull market. And so yes, for this to occur, for these types of squeezes to occur, the one with Carvana, the one with AMC, the market needs a ton of liquidity. It's not possible in a dead market or in a low liquidity market. And so these, I do believe, is market manipulation by the exchanges. And it's not that they're not trying to catch themselves. They're trying to catch the little guy. They're trying to catch all the people that got bearish on AMC, the retail community that shorted the stock. It's not the big hedge funds that are getting caught. It's the small guy. And they know that they can catch them in this high liquidity environment. But it also signals to us when they begin to pull those bags away from the retail community, in my mind, it's a signal that they see that the liquidity and the bullish momentum of the current market is coming to an end. Now, we don't know. Last time this happened in 2021, it happened and there was still a couple more months the market went up. We could be in that environment, but I'm just going to predict this move with AMC is a sign that we are getting to the near end of the micro bull run up, and we could be facing a bigger correction. But I also want to warn, don't get too bullish on being too bearish right now. I said that in my last video. I'll repeat it today. If you think that you can just load up on shorts and load up on puts, you could find yourself getting roasted, toasted, and burned at the tail end, because we're not just going to go up mildly and then just go down mildly. I think the end will be seen with some parabolic moves up, and they could be even in the next 10 days. It could happen with Apple stock perhaps peaking and then possibly selling off. That would be a signal to me. But we're going to see that type of movement before the end is signaled, and then we're going to see a much stronger move down for a while. And so no, I would not recommend buying Carvana at this level, and I would not be a buyer of AMC at this level. It would be very, 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 very risky for you guys. That's it for today. As always, I want to thank each and every one of you guys for hitting the like and taking the time to watch my video, especially to the very end. Thank you so much. Peace and blessings, guys. We'll see you in the chat.